Hey everyone, I'm Nick Johnson, and today I want to talk about how Shell professionals can save more by taking advantage of the Mega Backdoor Roth and their 401k, the Shell Provident Fund. So as we see with most of our clients, you're very well aware that you can contribute $22,500, assuming you're under age 50, to the Provident Fund. And you can contribute this either pre-tax or Roth. Most people are in their high income earning years. Pre-tax is the way to go. Shell will contribute 10% of your compensation, assuming you've been there at least 10 years, to the 401k. The max you're going to get from Shell is $33,000. But when we look at the Provident Fund, when we look at the rules for the 401k, the max contributions from all sources is $66,000. So that leaves $10,500. What can you do? Shell has actually set it up, and they've done a phenomenal job structuring their 401k. So you can contribute $10,500 to something called the after-tax source. What is the after-tax source? It's not quite pre-tax, it's not quite Roth, but it's additional contribution that you can make to the 401k. The way the after-tax works is it's after-tax money that goes in the 401k, but any growth is taxable. So when you withdraw after-tax money, the contribution comes out tax-free, but the growth is taxable. But here's where we want to take advantage of this. With this after-tax source, what we want to do is, if you've already been maxing out your pre-tax, what about if we save the additional $10,500 to the after-tax? Annually, we roll it out to a Roth IRA. If we do this right, it's a tax-free conversion, tax-free rollout, and we let the growth happen in your Roth IRA. Now, any growth is tax-free for life. And we can get $10,500 into a Roth for you annually. And this is something called the Mega Backdoor Roth strategy. And this is fairly easy to do. You log on to Net Benefits, you navigate to the Provident Fund, you go over to the Contributions tab, and you want to set the after-tax contribution so that enough money is going in so you get your $10,500 into the after-tax source, and annually you got to call Shell up, roll it out to Roth IRA so that you get the growth in your Roth. And this is really a phenomenal saving strategy if you have an additional money able to be saved over and above already maxing out the Provident Fund employee pre-tax or Roth portion. Now, sometimes when we propose this idea, clients come back and say, well, if I can save $10,500, should I go through all the effort of contributing to the Provident Fund, roll it out to the Roth IRA, or should I just save in a taxable account? Here's the thing. With a taxable account, with a brokerage account, you're going to pay taxes on capital gains. You're going to pay taxes on dividends. You're going to pay taxes on interest as it's earned, which means you're going to get tax drag. Which means your money is going to be compounding at a lower rate of return. With a Roth IRA, you never pay taxes. So especially if you're young, especially if you're under 50, especially if you've got time horizon to retirement, making sure you're maxing out both the pre-tax and taking advantage of the Mega Backdoor Roth strategy with your Shell Provident Fund can really set you up for success. If you liked this content today, I highly recommend you check out our Max Savings webinar below. We talk to Shell professionals how they can take advantage of their benefits, save money, and minimize taxes. Also, follow us on LinkedIn. Follow us on Facebook for additional educational content you can use. And of course, subscribe to our YouTube channel.